Hi, I am Max, and welcome back to another episode of Reading Stock, where we break down the latest stock action for you. Today, we're diving into Amazon AMZN and looking at a juicy price chart that's got some interesting signals going on. So, let's set the stage here. We've got AMZN currently trading around $190.83, and here's where it gets interesting. It's sitting right under a pretty solid resistance level at $191.70. Think of this resistance as a ceiling. It's been a tough spot to break through, so the big question is whether Amazon can push above it, or if it's going to bounce back down. Now, Amazon's price has been performing in the top 10% of its range over the past 200 trading days. That's a percentile rank of 90.5%, which is pretty strong. It means we're looking at the higher end of its recent range, so there's some momentum here, but maybe also a hint of exhaustion. We've seen it climb, dip, and then climb again, showing resilience with those higher highs, especially in the last few months. But here's the flip side. If it struggles to break that 191.70 resistance, it could dip back toward support at 180.25. Support is like the safety net below, where buyers might step in to keep it from falling too much. So, for the traders out there, here's the play. If Amazon breaks above that 191.70 line and stays there, that could signal a good time to ride the wave up. It's a bullish signal for sure. But if it can't make that leap, or it drops back down, we might be looking at a short-term correction, maybe some consolidation around that support level. Now, let's take a look at its implied volatility smile chart to assess the option market's take on its bull and bear struggle. All right, let's start with that top scatter plot. We're looking at or implied volatility on both puts and calls across different strike prices, and there's a noticeable difference. The PUT options, especially at lower strike prices, have way higher IV compared to calls. Now, what's that telling us? Well, it usually means that traders are more nervous about a potential drop, so they're willing to pay a premium for downside protection. In other words, folks are hedging their bets here, preparing for the chance that the stock could slip. Then there's that bottom chart on volume, which gives us even more insight. We're seeing a huge spike in volume around the 180 PUT strike. This level is like a magnet, a high-volume strike price, where the stock often gravitates because there's so much action there. With so many people trading the 180 PUT, it's a signal that traders expect this level to be a key price zone. If the stock dips down toward 180, don't be surprised if we see some extra drama as people start adjusting their positions. The high put volume at the price between $180 to $190 is reflected in the price chart as the support line. In the implied volatility trend chart, we see something quite interesting here. As the implied volatility rises since October 18th, it has not had any significant drop. And towards the end of the month, we see the divergent in the fourth level for put and call. This clearly shows that in the near future, the stock tends to be more bearish. Now, look at those dotted lines, the green 50-day and purple 200-day moving averages. They're both trending upwards slowly, which might mean that the overall sentiment is shifting toward higher volatility, at least gradually. It's subtle, but could be a hint that traders expect more price action on the horizon. Conclusion: it appears that for AMZN, the risk is towards the downside. And if the stock starts to pull back, wait until the price touches below $180 before you start to accumulate its stock again. That's all for now. If you find this exposition is useful, please subscribe and upvote.